QuickBooks Pro Desktop 2021 Bank Feeds, Matching Sales Receipt to Deposit. You want to get into it? Try QuickBooks. They're owned by Intuit. So you'll be getting a small piece of Intuit by purchasing an Intuit product. Here we are in our bank feed test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We now want to think about how the bank feeds are going to fit into our receivable process for our customer payments. And we're thinking about a situation where we want to use an invoice. We want to use an invoice, which will be increasing the accounts receivable, recording the other side to sales. We could then wait until the deposit clears the bank, as we saw in a prior presentation, or possibly we want to record the receipt of the payment, and then we can match the receipt of the payment at this point in time with the amount that's going to be clearing the bank, and we will see then on the bank feeds. So let's recap this. If we record the create sales receipt, increases the accounts receivable, increases sales. We record the receive payment here then. That could either increase undeposited funds or it could go directly into the checking account at that point, and then it decreases the accounts receivable. Either way, we can match then what clears the bank on the bank feeds to this point in time if we so choose. Again, note that if you do this method, then when you create the sales receipt, you're typically tying that like to one invoice. So you want to make sure that what clears the bank will be in the same format as what will be on the receive payment. If it's not, if you're grouping multiple items together, multiple like receive payment items or create sales receipts together, when you make the deposit, then they're going to show up on the bank statement as a group, and you're going to have to go through undeposited funds most likely and then record the deposit in order to match out what you recorded in the system to what is on the bank statement, the bank account using, and the bank statement using the bank feeds. So let's set this up. Let's set up another item. So I'm going to go to the lists drop down. I'm going to set up an item here, and I'm going to say this is going to be an item. I'm going to set up a inventory type of item once again, or a non-trackable inventory. So it could be a service item. You wouldn't have to worry about sales tax. That would be the easiest method. You could do an inventory item. That means you're going to be tracking inventory within the system. So that would be a perpetual inventory system. If you want to do a periodic inventory system, but still charge sales tax, then you're going to use that non-inventory part. Let's do that one to complicate things a little bit, but not have to deal with tracking the inventory in a perpetual system. So I'm going to call this part. This is inventory, I'll say number 10, inventory 10. That's going to be what we're selling. Inventory 10, that's what we actually sell. The sales price is going to be for the 101.13, and I'm going to say tax does apply to it, and we're going to charge this to the sales item down here. It's going to go into sales. So there it is. I'm going to say, okay, now we have our item set up. I'm then going to go to the home page, and the first part of this process would be to create the sales receipt. So I'm going to make another one to customer 3, new customer 3. This is who we're selling to. And I'm going to make this as of 05/16/20. And we'll say that this is going to be inventory 10 and quantity 1. There's our transaction on the invoice, the initial thing that we would be recording, that this is going to record an increase to the accounts receivable by the 106.19. Increase to the sales by simply the 101.13, increase the sales tax. So it'll track the sales tax for us. So I'm going to say save and close. And yes, let's check out the reports. Reports drop down, company and financial. Let's go to the balance sheet first, changing the dates up top, customizing the dates from 01/01/20 to 12/31/20, and run that report. And the accounts receivable here, we will then see our invoice of we had the 106. There's the 106 invoice right there, and it's past due. Okay, so we'll close that back out. The other side is going to be on the income statement. Reports drop down, company and financial statement, profit and loss report, changing the dates up top from 01/01/20 to 12/31/20. That's going to be in the sales item. Double clicking on the sales item, we see it for only the 101.13, not including the sales tax. And then the difference of the sales tax would be tracked for us in this method by going to the balance sheet and the sales tax payable account, and then we could pay the sales tax at a later point in time. Now, if we go to the bank feeds, if I go up top and go to the banking, and we go to the bank feeds and the bank feed center and skip this. Now I'm in the recognized area because I set a rule for it, but I'm going to pretend that these are unrecognized at this point in time. And then I'd look down here and we would match this amount out. So I'm going to go down to the, maybe I want to check it by, let's open this up and put type here and then close that back out. And I want to see the type. And I want the deposits, and I'm looking for the deposit of the 106, the 106.19. So here it is. If I was to go to that now, and I was to wait, I can go say I like to go to add more details here, and then in the second tab, we currently have the invoice. So if I could wait till it clears the bank then, and then do this as we saw in a prior presentation. I won't do it now because we saw that in the prior presentation. Or we can go to the home page here, and we can go to the receive payment and record the receive of payment, then match it. If I go to the receive payment, this form then will be decreasing the accounts receivable. The other side could go either to undeposited funds, which is the default, so that we can then group them together as needed to be done before we deposit them, or we can go directly to the checking account. Now this drop-down window will not be available unless you change the settings by going to the edit drop-down, preferences. You go into the payments, company preferences, and you want to uncheck this item, which will close all windows if you need to change that, and then you'll have to go back into it. So I'm going to close that back out. So let's imagine first that we're going to put this directly into the checking account. Now, if I do that, then it's already in the checking account, and we're not going to record anything new when we go to the bank feeds. We're just going to match out. We're just going to be doing part of our reconciliation process. If it's in undeposited funds, then it will do something when we do the matching because it will take it out of undeposited funds, then put it into the checking account. Let's first put it into the checking account, and then we'll do the undeposited funds. So I'm going to say save and close, and say yes, and transaction. Well, hold on a second. We have to record the customer here, which is going to be customer 3, and then check off the invoice. All right, and there we have it. And then I'm going to say yes, and then the form of payment, whatever the payment is, electronic, I'll just keep it on cash right now. Okay, now we're going to do it, and it'll reduce the accounts receivable and record into the checking account. All right, save and close, and we'll say yes. And then let's go to our balance sheet, and we have in the checking account, we have that 106 now should be in the checking account, 106. It's in there with the payment, which is that form we just took a look at, and then the other side's going to be decreasing the accounts receivable for the 106 has gone back down. So that is good. Looks good. Now if I go to the bank feeds and say that 106 is still in the bank feeds down here, I'm going to say if I go find that 106 that we were looking at, I'm going to sort it by deposit type again. It unsorted my sorting that I had last time. Now it auto matched it here to the payment, so it already picked it up for us, which is often the case that it will do if it's an exact match. I'm gonna not match it now so that we can then go back into it. So I'm gonna unmatch it, and then I'm gonna go back into it. And when it was matched, it put it basically up on the top. So then I'm gonna go back into it, add more details so we can see it in this format, and then go back on over, and I'm gonna say show all, and then we see the 106 now is in there in the form of a payment. So then I'm going to check it out. I'm going to rematch it now, and then I'm going to basically save and close it. Save and close. So once I do this, this will now just basically verify what has happened. It's not going to record anything because it's already been recorded in the checking account. So this is just double checking. What it does do is help us with our bank reconciliation, tying out what we did on our side to the bank side. So I'm going to say save and close, and then again, once again on the balance sheet, nothing really new happened. If I go into the checking account, I had already recorded it in here with the payment. We have just basically verified it now, which you can see it's cleared kind of with the bank feed. So it's helping us to do our reconciliation process. Now let's do the same kind of thing, but this time let's go back on over, and when we get to this step, I'm going to record it in undeposited funds instead of directly in the checking account. So let's do another one. I'm going to create an invoice, and I'm going to call this customer number 8, let's say, and quick add, and then I'll say let's make it on 6/15/20, and this one I'm gonna set up a new item. So I'm gonna say item number 8, let's say, tab. We'll set up the item as we go this time. I'm going to say new item. It's going to be a non-inventory part again. And I'm going to say, what do we call it? Item 8 that we set up. And the price is going to be for $39.01. And it's once again going to go to sales. So I'll say save. And then I'm going to say quantity 1. So here's our transaction. So once again, invoice increases accounts receivable. Other side goes for the 40,096. The other side is going to go to the sales for the 3901. Difference increases the sales of tax. We're not tracking inventory in this one because we're going to do a periodic system. So I'm going to say save and close, and okay. And I think I'm okay there. Save anyways. I'm going to go to the balance sheet just to check that. So accounts receivable now increased by the $40,000 or $40.96. The other side is going to go to the profit and loss. So profit and loss is going to increase on the sales side for just the 3901. The difference is going to the balance sheet for the sales tax. So the sales tax is going to be increased here by that 105. So now let's record the received payment. So I'm going to say, okay, now then we have the received payment. So we're going to assume we get a payment for that amount. And I'm going to say this is going to go into customer 8 that we set up here. I'll just leave it as cash again. I'm going to check off the payment. Don't show me that again, please. Yes. And so there is the amount that we have. So that's going to be the amount. We're going to tie that out. And this time I'm not going to put it into the checking account, but use the default into undeposited funds. Now it's going to be decreasing the accounts receivable again, but put in the other side, not into the checking account directly, but undeposited funds. So I'm going to say, all right, let's go ahead and save and close that. And then I could either deposit it next time, or I can basically wait till it deposits and clears the bank account. Again, if I wait till it clears the bank account, I got to make sure that this matches the same format that it's going to be seen on the bank account. Otherwise, it's not going to match up properly, and I'll have to use the deposit to kind of match up so it looks the same grouping on the bank statement as it is in my books. So now I'm going to go, okay, so let's go back to the balance sheet. And now we have this undeposited funds that went up instead of the checking account, and the accounts receivable now has gone back down. So accounts receivable is going back down. It went into undeposited funds. Now, instead of going and doing the deposit here, I'm going to wait till it clears the bank, go to bank feeds, and then I'm going to say, all right, now let's see this, that it cleared the bank. I'm looking for the 4096. So here's the 4096. So that's the one. I'm going to hit the drop down and say I need to match this. So let's go to add more details, and then I'll go to matching, and I want to look at all of them. And so there's the $40.96. So I'm going to check that one off. And when I record this, now it'll record a transaction. It's still doing it to a payment, but now it's going to take it out of undeposited funds and put it into the checking account. So an actual transaction happened this time as opposed to last time, because it was already in the checking account last time. So I'm going to say save and close. Yes. And then if I go to my balance sheet and double click the checking account, so now we've got that $40.96 there in the format of a deposit. And then if I close this back out, the undeposited funds is gone. It's a zero balance. So I like to see it in the trial balance. So I will go to the reports, inventory, and then we could go to the, I'm sorry, not inventory. We could go to accounting and taxes and trial balance, changing the dates up top from 01/01/20 to 12/31/20. And then the undeposited funds back down to 0 because it took it out of undeposited funds and then put it into the bank for the amount of that 4096 right there. So now it went back out with this item. Now, notice I might have messed up the dates might be a little bit out of order, but here's the deposit and here's the payment. So that's the process you can do. So you can go to the home tab and you can do those two. Now, if you can't, if you're going to be grouping these items in a way, like when you go to the bank, if you got cash payments, for example, or if you get credit card payments, it could be a problem because you're going to group multiple payments that you receive at the same time together. So you're not going to be able to match up as easily something that clears the bank account in the bank feeds to an individual invoice or payment receipt. And therefore, you're going to have to use that undeposited funds most likely and then actually record the deposit so that you can then group them properly when they clear the bank. So we'll take a look at a situation on that. Next time, you'll have a similar situation for the create sales receipt as well.